Joining us in the studio, Yusuf Moola, who is Senior Sharia Portfolio Manager at Sanlam Private Investments. Hi, Yusuf.
Hi.
As it happens, we talked earlier today about Sharia banking and the ways that have been found to offer good, solid investment products for investors who want that, and of course from Muslim investors who need to have that, who cannot, for example, take a product that charges interest. Set the scene from an investment point of view, because banking has one kind of dynamic. So what is the global context for Sharia investing?
To start off with, 1 billion of the world's population of 6 or whatever is of the Islamic faith. So it's a big enough market out there. And by far the biggest mass of money that's available for investment is the petrodollars. You know, if you look at the Middle East, I mean, those guys are cash flush. And they have tons of money to invest. No one has seen them come, you know, since September 11, when those 2 buildings went down. I mean, they've pulled out a lot of their money out of the US and the so-called first world, and they're moving into emerging countries. And countries like Australia have also seen demand for sukuks, which are Sharia-compliant bonds, and Sharia-compliant investments. So, and they're definitely earmarking Africa. There's been tremendous amount of money going into North Africa and Egypt in particular.
It's, we have a couple of factors, I suppose, in our favour in South Africa to do this. On the one hand, we've got a very sophisticated financial services sector, one of the top ones in the world in terms of systems and in terms of policies and competition. We also have an Islamic community here, so it's not as if it's a new thing to South Africa to have Sharia-compliant banking. So these two are combining to make us an attractive destination.
Yeah, look, the Muslim community in South Africa, you know, the Malays came here 350 odd years ago, and the Indians probably came here 100 plus years ago. So, you know, those diverse, those are the 2 major population groups in South Africa from Islamic faith. And, you know, traditionally, if one looks at the Indian community, I mean, we were traders, and with the demise of apartheid and more youngsters getting educated, they're moving more and more into the corporate world, and they're forced to invest their money in pensions and group provident funds. And a lot of them have been unable to invest in a Sharia-compliant way. That's the first side of the equation. And the other side, or the other embed, is obviously, you know, discretionary money. So a lot of people save money, and they want to keep money away for a rainy day, and that discretionary money that they want to invest, they want to do it you know, within the Islamic guidelines.
Before I bring Warwick in, you raised an interesting point which hadn't occurred to me. People join a big company, particularly the big corporates, compulsory to join the medical aid, compulsory to join the provident fund or pension fund, and there may be people who say, no, I can't. What do the big companies do? What are they doing when someone, as it were, on conscience grounds says, I don't want to join your provident fund?
Most big companies actually force you to. So they basically put a gun to your head and say, if you don't want the provident fund, unfortunately, you know, you can't, you'll have to resign. So guys were given different verdicts from the religious scholars in the past, where, you know, they invested in a non-Sharia product, and when it matured, they had to give a certain amount away into charity. Now it's much easier. I mean, you know, one can get to my portfolio, for example, through the Glacier platform, which is geared for retirement money. And we can make it Sharia compliant. So what we do in a Sharia process, there's a lot of processes that go within the whole system. And first, you know, the Sharia scholars give us a universe of shares that we can invest in. The obvious ones are the breweries and the gamblers that are out of there. And there's other criterion. I mean, the debt to equity has to be less than 30%. Your non-permissible income, so your interest earned, Cecil, completely compliant share, but when they have money on call, they put it on call, so it attracts interest. That amount must be less than 5% of the total earnings. So, you know, you got to meet all those criteria, and even if Cecil, let's argue they pay 3% of their income is out of interest earned, that 3% has to be taken out of the dividend and stripped out and paid to charity. So it's a big process. It's not just straightforward.
Warwick?
Well, I mean, there are, I guess, possibly degrees of strictness. Is that the case, where one could be very, very strict, or some that perhaps have an area of grey as to level of strictness? Is it a universal benchmark that these funds must work to?
Yeah, look, first of all, if you can categorize it, there are the ultra-religious guys that believe that shares are totally unallowed. and they take the grounds that, for example, MTN is in the spotlight at the moment. They would typically tell you MTN is a 100% Sharia compliant company. They're in telephony and mobile, mobility, but it's because of the bribery and those type of things. A Muslim guy, a strictly Sharia guy, shouldn't be investing in there.
Of course, it's allegations still rather than
yeah, but
proven.
I mean, obviously it is allegations,
that kind of
but
thing, yeah.
it's not unheard of for companies to bribe. Let's put it that way. I mean, often it's not proved, but sometimes it does happen. Let's put it that way. So, to be 100% clear, some of these scholars would say, the ultra-religious guys would say, don't invest in there. Rather invest in your own business, in your own stock, for argument's sake. Obviously, the other side of the coin is guys say, no, you can invest, provided you buy a Sharia compliant share. So in the levels of degree, the degree of compliance is basically, there's a association, IOFI, and they lay the guidelines. All these ratios that I mentioned, I mean, they're basically universally accepted.
When you talked about the ratios, Yusuf, and it sounds quite complicated. It sounds like there's quite a lot more work to be done to ensure compliance, and of course you've got to be more transparent so that you don't get accusations that it's hidden somewhere there is something that's not compliant. Doesn't this add to the costs and counteract the investment value?
Yeah, look, it does add to the cost simply because, I mean, to give you an example, you need a Sharia board in place, and normally there's 3 members, and you've got to pay their salary, obviously, and you need an internal Sharia officer to make sure that all the purification goes down correctly, and a guy who maintains this universe, and every time results come out, they have to check if the debt to equity is right, and it conforms to those. So there is additional cost, but at Sanlam Private Investments, we decided not to actually, we absorb the cost and we don't charge the client extra. So it's basically, whether you take a general equity portfolio, bespoke, or you take a Sharia one, your costs will be the same from a client point of view.
What sort of scale are we talking about here in terms of the amounts of money that go into these funds relative to the totals?
Look, there's about 5 Sharia compliant unit trusts that are out there in the market at the moment. I mean, some of them started in 1987, as far back as that. I mean, I think the total pool is in the region of about 5-6 billion. So it's substantial enough.
Your top holdings, your favored Sharia compliant companies?
Look, I mean, Sharia share or portfolios are biased towards certain sectors because we're not allowed to invest in the banks and the insurers and a lot of the retailers as well. So, by definition, we're more resource heavy, telco heavy. But our preferred stocks at the moment, I mean, even if we're talking non-Sharia, is Anglo's Bulletin. We like the quality telcos, MTN, Vodacom. Some of them are a bit expensive. Like Vodacom's a bit expensive at the moment, but under 100 will be an excellent buy. And we look at other stocks also. Like some of the the better quality industrial stocks, like the AVIs, that's a preferred stock for us as well.
Warwick?
Yeah, that's it seems like an interesting sector. It's biased towards construction at all?
Yeah, look, construction is, most of the construction counters are Sharia compliant as long as they meet the 30% debt to equity. I mean, we've got Avenge in our portfolio.
What is the reason for that particular percentage of debt to equity? What is the magic number there?
Okay, the scholars have deducted from the Holy Quran and from the sayings of the Prophet that a third, it should be less than a third for it to be allowed. So that's why the 30, so they can actually, the board could actually push it up to 33 if they want, but they like to stick to 30%.
Is it a competitive market that you're in now? Because there are quite a few institutions which now say that they have Sharia compliant operations. Yeah,
look, from an investment point of view, it's still in infancy. There's not a lot of products available. I mean, if you ask me for a guaranteed product on a Sharia space, there's some guys trying to work on a product like that, but it's still not at market. There's tremendous demand for that. From a bespoke point of view, I was the first guy out in the market. From a unit trust point of view, as I quite correctly said, there's 5 different competitors playing in that space. So it's a niche market, although more and more guys are actually trying to enter that market, and it's competitive.